Yeah, great. I think you've been made the.
Sir, can we start, sir?
Can you see my screen, Amit?
Yes, we can see your screen.
Can you hear me, sir?
Yeah, Chanchal, let's start in a minute. आप एक काम और कर लोगे? Can you take a screenshot also at the start
Sure.
and just send it to me separately?
Sure. So, may I start?
Yeah, I think we've got around 27 odd people.
Yeah.
27, 32 odd people. Yeah, so we should start. Yeah.
Sure. Okay. 1, 2, 3, start.
Great. Good morning, dear participants. This is Amit Sharma from the IIA Delhi chapter. And again, I want to start by welcoming all of you for attending today's session on data analytics for auditors and continuous control monitoring. I'm sure all of you will agree that data analytics is sort of become a game changer for us auditors, because we can use the data analytics to find a lot of trends, etc., which can help us in our audits and see outliers and go and dig a bit deeper in those sort of things. So I'm sure all of you will agree that as auditors it's very important for us to understand the nuances of data analytics and how we can use it to become better auditors. In addition to this, the entire the continuous control monitoring and all, I mean, if we're able to use it adequately, it'll actually help even the management and the auditors to assess the effectiveness of controls and detect the risks, etc. There are, so there are a lot of positives on how we can go about using this. Now, given this pertinent subject, I'm actually very privileged to introduce our speaker for today's session, Mr. Deepjee Singhal, who I have the honor of introducing today. So Mr. Deepjee Singhal is actually a partner with Pipalia Singhal and Associates, and he's got more than 25 years of experience in setting up risk management mechanisms, reviewing, setting up internal control structures, internal audit services, and business consultancy services with design, the documentation and implementation of system and procedures. He's been associated with various assignments on internal control reviews such as COSO, COBIT, compliance with Sarbanes-Oxley or SOX requirements, along with the IPPF or IIA Incorporated. Again, he's also co-authored several research papers on IIA on internal audit, which has been published with IIA, and he's also co-authored 2 books. Again, one of which is Internal Audit Assurance, Governance, Risk and Control, a complete guide to internal audit. And the other one is Best Practices by Leading Chief Audit Executives Making a Difference. I myself have personally actually gone through those books and seen them, and I think it's really a privilege, Mr. Deepjee, for having you for taking this session with Delhi chapter. I'm sure all of our participants will truly value the kind of insight will get for you. Truly an honor, sir. With this, I'd actually like to hand it over to Mr. Deepjee for taking us through the session. Mr. Deepjee, over.
Thank you very much, Amit. Thanks a lot for the kind introduction. Good afternoon to all the participants, the wonderful participants who joined in today afternoon. Noon, when Amit spoke to me first, he said, afternoon is a good time for participants to join. So I was surprised because noon is something, neither morning nor evening, but, great. So great, wonderful to have all of you. Let me thank Saket Mehra and Amit Sharma because they took the initiative of, contacting me, talking to me, organizing this presentation, organizing this talk with all of you on data analytics for auditors and continuous control monitoring. So let me thank Institute of Internal Auditors India Delhi chapter, Saket Mehra, Amit Sharma, other office bearers, of course the coordinators for today, the organizing committee and the other coordinators in IIA who are instrumental in making this happen. The topic data analytics for auditors and continuous control monitoring is very close to our heart, close to our heart for are, since I'm on the advisory board and since we have this company, Sama Audit Systems and Software Private Limited, and also the consulting firm which Amit talked about, Deepjee Singhal and Associates, we have been associated with various projects on data analytics and continuous control monitoring, not only in India, but neighboring countries, and also have observed very closely the developments in this area around the world, in North America, in Australia, New Zealand, in South Africa, in Europe, the UK, which I am saying differently from Europe, but UK separately, and how internal auditors there, how auditors, even the external auditors, have been adopting or taking up data analytics and continuous control monitoring in different organizations. So with that background, I would like to share with all of you data analytics for auditors and continuous control monitoring. Now, the canvas for today would be that for data analytics for auditors, I would like to, let us look at what are the key objectives for data analytics. First of all, when we look at it from internal auditors perspective, what are the priorities, what are the challenges, what kind of structure would work best in an organization in the Indian context, in terms of whether it should be a decentralized setup, whether it should be a centralized setup, and then look at some case studies on data analytics. What will be the methodology for carrying out data analytics by the internal team, and then switch to continuous control monitoring, continuous assurance, or continuous auditing, as we may call it. What are the differences between the three? How do you adopt continuous control monitoring? How do you progress from ad hoc analytics to continuous control monitoring? What are the benefits? What are the challenges? Again, and then some case studies in the Indian context on how continuous control monitoring has been made possible in organizations in India. So I think what my emphasis would be to restrict my talk today to developments and case studies specifically in the Indian context. You may find some dollar signs in my presentation, but all the case studies and all the information, we have tried to restrict what is applicable to the Indian context and what is being done on the ground in the country. So I think with that, let us start off with what are the key data analytics objectives for internal audit. So I think if you talk about the key data analytics objectives for internal auditors, I think it is either you identify anomalies. That's what auditors have been doing over the years, looking at what are the deviations, what are the anomalies. Maybe then also look at one of the other objectives would be continuous auditing. So wherever there is repetitive recurrence of anomalies or deviations which the management would like to track or which are critical for the organization to be tracked, then the internal auditor would maybe adopt continuous auditing. Or maybe there is a regulatory requirement, regulations which impact the organization where it becomes critical for the organization to take care of them. We may adopt one of the objectives may be continuous auditing. Of course, a story can tell, a picture can tell much more than words or figures or an Excel sheet. So one of the other objectives for data analytics would be data visualization. The other thing is, other objective is analyzing big data. You may want to have audit process optimization. Now, audit process optimization would be both in terms of either efficiency or effectiveness. Effectiveness in terms of carrying out 100% auditing across the organization. So it's audit process optimization because you're not looking at a sample, you're looking at the entire universe. So you can quantify, you can bring to the management what will be the value add and why changes are necessary to a particular process or to a particular risk incident which has happened in the last so many years. And efficiency would be the crunching down or bringing down the cycle time for the audit cycle per se. So audit process optimization. So you may adopt, one may adopt, an internal auditor may adopt analytics for audit process optimization. It may be adopted for or maybe one of the objectives would be causal analysis, because you like to have a root cause analysis and say what's the cause and effect for a particular risk incident. Use it for risk assessment. You use it for test of controls, use it in IFC controls, test of controls, and of course the last objective which I am highlighting is conduct predictive analytics, because organizations are no longer happy with what has happened or what is happening. They would like to know how they can prevent any untoward incident in future. So what are the predictive analytics which an auditor can get into? Now, if we talk about this, choosing a reasonable data analytics objectives is the key for an internal department. It will depend on the need or the skill set, competence of the internal auditors, internal audit department, whether it is in-house or outsourced, and also the negotiation of the role of internal audit by with the management, with the top management, with key stakeholders, with business process owners, and with their key stakeholders. And then if the objective is then chosen, maybe multiple objectives are chosen, they may overlap, and then you can embark on a journey for data analytics. So these are the key data analytics objectives for internal auditors, which can be kept in mind, and then you can choose appropriately out of these objectives to take the data analytics exercise forward. Now, what are the stages within internal audit where data analytics is used maximum? Now, this is an old survey which I picked out from the net, but still relevant, because if you compare it with the current data, it's still relevant. This was carried out in 2014, but it's still relevant in 21, because if I looked at all the stages where internal audit, where data analytics is used, it remains the same. And I think initially when this survey was carried out, there were 308 internal departments which participated in this survey around the world. Now, the stages within internal audit where data analytics is used most frequently are the engagement fieldwork. One is the use it for fieldwork. Maximum departments around the world continue to use it in the fieldwork. Then, of course, you use it for engagement planning. The next 53% of the respondents said that they use it for engagement planning. For scoping, so that you scope your internal audit based on risk assessment, your annual risk assessment, which is 28%, and the scoping, which is 42%. The support of advisory work performed by internal audit is 36%. The reporting is 17%. Engagement follow-up is 15%. Others are 11%. So more and more internal auditors have always used it for field work, but we can say that the reporting, engagement reporting, is also slowly creeping up. Over next few years it will creep up, because as you adopt one of the objectives as visualization, more and more auditors will adopt data analytic tools which will give you better visualization, which can give you visualization in terms of drilling down, carrying out field work, and also making a better presentation to the stakeholders. So I think but more or less we can assume, or we can derive from this information that data analytics is used for field work, which is the most frequently used area. Now, who are the advocates, or what are the challenges and key concerns of these challenges? I think one needs to, in the internal audit department or as a champion of data analytics, when an internal audit department embarks on a journey of analytics, or is already in the journey but wants to take it further on continuous control monitoring or others, I think for analytics, there are various stakeholders that you have to consider. They would be audit committee, CEO, business data owners, the IT team, the audit staff, other departments who use data analytics, external auditors. So I think what are the what are the challenges and what are the key concerns? One must be understanding this very nicely to ensure that you get a buy-in from all the stakeholders, so that your data analytics journey, your budgets for data analytics, your adoption of data analytics, and usage is encouraged by all these stakeholders. So I think the audit committee, I think, and also you satisfy the key concerns of these stakeholders with which the internal auditor is dealing. I'm looking at it from the perspective of the head of the internal auditor or a partner in charge from outsourced firm. So Audit committee, how will data analytics help in audit committee's understanding of the risk profile? From the CEO perspective, I think what is important is what is going to be the return on investment. Why do we want to budget for it? What do we get? What does the organization get if this is being done? And what is the work carried out by someone else in the organization? Can that be used, or does internal have to do it differently? Because maybe the IT is doing some analytics, or maybe the costing department is doing some analytics, commercial is doing something. So does the internal need to do it? And what will be the ROI? From the business data owner's perspective, what is the integrity of the data? How will internal maintain the integrity of the data? Whether the request for data will come to them regularly, and do they have the bandwidth to address this? Because when one adopts data analytics, you will find that you need to go back to business data owners and say, as you have been requesting, documents, as you've been requesting electronic documents also, you start requesting them for, master data, or you start requesting them for transaction files on your electronic form. So do they have the bandwidth or access to certain systems where they can draw down files and send it to you, and so on? So for analytics, do they have the bandwidth, and how this data which is sent to you, and that will be the data for the entire period or for maybe more than 1 year. So how will the integrity of this data be maintained? From the IT team perspective, does IA have the necessary approvals to access data? How the privacy will be maintained, and will this impact when the when the internal is wanting to access the systems? Maybe it is SAP systems or homegrown ERP systems. Will it impact the database speed? Will it impact the regular operations for the organization per se? From the audit staff perspective, I have one more slide to share in terms of decentralized and centralized working, but how will I get trained on data analytics? How will it impact my project timelines? Will I be able to apply data analytics or not? So there are areas of concern or in the minds of the audit staff. So that has to be addressed in terms of how do I get trained on analytics? What will be the impact on timelines, and how will I apply data analytics? I think the number one concern, there was a survey carried out by a number of organizations. Caseware carried out a survey across the world last year in terms of internal audit trends. There were other big four surveys which were carried out, and what came out very clearly for the data analytics and continuous control monitoring, the challenges were training internal auditors, training staff, whether internal auditors or external auditors, on data analytics. That was the number one concern which was addressed in all these surveys which came out, whether it is North America or whether it is other regions of the world. The other departments who use data analytics, does IA want to share our tools and technology with them? Will it overlap? Do we want to hand over to them later on and move to other areas? So this has to be addressed, understood, buy-in bought, clearly mapped out before you start using data analytics. And external auditors, can we use internal auditors data analytics output to improve our risk assessment? So this has to be again discussed threadbare with the external auditors, with the understanding of the management, taking the CFO, CEO into confidence, because external auditors, as you know, can use the work of internal auditors. There are guidance notes, there are standards on it by various institutes, and of course in India, IC has put out some standards on use of internal auditors work by the external auditors. So how can they use it to improve their risk assessment, and what kind of work will be, what kind of data will be shared with the external auditors? Anticipate the concerns and prepare to respond. So I think before somebody embarks on a journey or is already part of the journey but wants to up their game, start with more of data analytics and start with more of concern areas. I think what is important is to clearly understand that these are the various stakeholders, they have their concerns, and we have to be ready with a chart, with a blueprint, with all the concerns being addressed. And I think that would lead to a very successful data analytics exercise, and also a successful internal exercise per se. Now, what are the key priorities of internal relating to data analytics? Now, I think usually an internal audit carries out theme-based audits. You have a procurement audit, or you have a project audit, or you have a maybe it's IT company, and you can look at human resource, HR, payroll, or you can look at projects in IT company. If it's a hotel industry, maybe you are doing a revenue based audit for a front office, or for you're doing it for the rooms, or so what are you carry out theme based audits that have impact on the business objectives at the organizational level. So you can build and utilize data analytics as a strategic capability uh, for near real-time anomaly detection tool. You can be integrated in the life cycle of the audit cycle, audit life cycle. You can focus on certain stressed assets or areas of pain areas for the concern for the business units. There can be identification of gaps in definition of roles and responsibilities. You can look at the SAP data, you can look at master data, you can look at segregation of duty, the gaps in definition of roles and responsibilities at the functional level that impact business controls, process efficiencies. So you can look at all those things using analytics. You can emphasize implementation of recommendation on issues which are repetitive in nature and have an organization-wide impact. Retain continued focus on compliance and technology risk, because that is going up the scale, in the sense the compliance is getting more and more requirements of compliance are coming into play, with regulation getting tougher, more regulation being enacted by the government on organizations, and organizations wanting to comply with it. So of course, a continuous focus on compliance and technology risks. Now, if you look at this entire gamut of theme-based audits or data analytics being used for near real-time audit or stressed areas, certain areas where there are pain areas and the management may want you to look at it, segregation of duty, compliance requirements, repetitive nature of jobs. So if you look at all these different challenges for the internal department, I think what is data analytics has enabled a data-driven audit methodology that is being adopted more and more by internal departments worldwide and in India. So what is happening is you will have to have a data analytics-driven audit methodology, focus on the business objectives. It will be enabled by data-driven audit. So it will look at revenue and operating margin, talent and leadership, productivity and efficiency, governance and reputation. It will take care of the entire major areas of the organization per se, and the data driven audit can be carried out either for theme based audits or for near real time anomaly detection, or for special audits which are carried out looking at SODs. As I said, I'm again repeating that auditors carry out all these things, and this requires a data driven audit methodology, because you can look at the entire universe. You can add value by taking the entire universe, looking at a particular area, or in that area you can look at the time period. You can scale it up to 1 year, 2 years, 3 years. You can look at the entire time period, and you can come out with value addition in that area based on what are the business objectives which an internal auditor wants to focus on. Now, the other main question which is always asked in any data analytics workshop which I have looked at is, do we go in for a centralized structure or do we go in for a decentralized structure? Now, there are merits and demerits, or we may say limitations. There are merits, demerits, limitations for each of these, either a centralized structure or a decentralized structure. And at the same time, there are solutions for both of them. So I think it will all depend on how the chief internal auditor, chief audit executive, or the outsourced partner decides to take it further. We have seen both these structures work in India across organizations. Many of the departments have centralized structure. Many of the departments have got a decentralized structure, with every team member having their using tools or using technology to do data analytics. Let's look at, in a centralized structure, we'll have specialized knowledge in data analytics with a few select individuals. Usually a small 1 to 3 member team. I think we have just seen a 1 to 2 member teams or 3 member teams across the country. Focused data analytics execution which is there. What are the limitations? Usually team members lack audit expertise because they are only doing analytics. They do not have much domain expertise. So they do not go out in the field. They do not interact with other users or other business process owners. So they lack audit expertise. Larger audit team does not learn data analytics. So the other team members do not learn analytics, and coordination becomes difficult as there are competing priorities. So you keep sending information from the audit members or audit team members back into this small centralized structure of data analysts, and they try to churn out the information. There are gaps in this coordination. It leads to more false positives. It leads to work. If the working is not very tightly knit, then it will lead to more false positives. The same data has to be run. The tests have to be run again and again, and that is a problem in this centralized structure. Now, what is the solution? Involve the data. If one needs to go for a centralized structure, then I think what is the solution is to involve the data analytics team members closely in the planning stage. So the data analytics team need not be an isolated team. They need to get involved with the planning stage, with the audit team members, with the various audit teams, so that they understand what is the objective, why internal audit is being carried out in a particular area, what are the list of objectives, what needs to come out from that internal audit area which is being audited, from that internal audit exercise. If the data analytics team is clear from the beginning, then this lack of coordination, understanding the domain expertise can be overcome. Then build formal checkpoints at the planning and execution stages of the audit to measure data analytics progress. So one needs to build in formal checkpoints in the planning and execution stages, so that you can keep monitoring the data analytics stages, so it doesn't become it is done at the end or it is done at the beginning and then you forget about it, and then there are linkage problems with the team and the data analytics team. So you need to say, at the beginning of the exercise, you'll get this data, churn it around, give it to the team, get it validated in the field, again rectify the audit test. What will be the checkpoints and how do you measure the progress as the assignment progresses till the conclusion of the exercise. So this will only work well provided the audit teams and the data analytics team work very closely with defined formal checkpoints. Now let's look at a decentralized structure. All the audit team members perform data analytics, so it is applied more for simpler routine objectives, etc. If applied successfully, it can be a game changer. Now, what are the limitations if it is a decentralized structure? Maybe the entire team has got carries out data analytics, so it's lack of expertise in advanced functions, because training for each and every person, if there is a attrition, if there is a turnover in the internal team members, so to build expertise, some members will be experts, other team members may not be experts. So lack of expertise in advanced functions, lack of continuity. Our team members leave, the knowledge goes with them. So lack of prioritization, what to do, where to apply, it is left to the team members to decide. They have not laid it down clearly. And risk of attrition I talked about. Now, what is the solution to make a decentralized structure work for data analytics? Structured training programs, continuous structured training programs. It is not that you train somebody today and that person is then left at sea, to just carry out analytics. You keep training on a particular technology, on a particular tool, on a particular methodology, on a particular structure. You know how analytics has to be carried out. You will keep training. So you keep building it up. So structured training programs linked to goals and objectives and performance measures to be put in place. Again, very important that you're carrying out audit in a particular area. Let me give you a very simple example. Let's talk about centralized structure. We go out to do maybe a internal audit in 1,000 crore or 1,500 crore organization, and you are called in to look at the procurement function. So maybe you work with the organization, you have addressed the needs of the stakeholders, which we talked about earlier. You have your list of around 140, 150 audit tests or audit objectives, or you may talk about which you can look at in a particular procurement exercise. I think later in the slides we'll look at the procurement, few audit objectives in a procurement case study and a payroll audit or a procurement audit. So what are the various objectives which a internal auditor can look at? So maybe there are, I would say that we carried out an internal audit just 2 months back for a say 1,000 crore organization, public listed company, and we said looking at payroll, our teams are looking at payroll and saying that there are 140 objectives which can be addressed. You get in data, you talk to the team members, their business process owners, and then you come out that okay, maybe 115 or 120 are relevant for the organization. The rest are not relevant. Then you work on those, get all the files, get do a data analytics. You generate certain reports. The team goes back in the field. The team goes back in the field, talks to process owners, looks at data, does walkthroughs, then again comes back saying that there are a lot of false positives. So you tweak your audit tests, again generate reports, again go back to them. So it's an interactive exercise, and then you carry out audits. So a decentralized structure is working there in a particular case, or there can be a hybrid also. The decentralized members have got knowledge about analytics, they carry out analytics, they are working in the field, and at the same time there's a advanced centralized structure which can help you churn around analytics for each assignment. So we have seen in certain cases there is a hybrid structure in place also, where you have got a centralized structure, a core centralized structure of 1 or 2 member team which have got knowledge about advanced functions, and then you have got decentralized structure also using carrying out analytics and working together with the centralized structure. I would not call it centralized structure, but a structure which is a hybrid structure. That I'm speaking from my experience. Usually we're talking about centralized or decentralized structure only. Now, what are the phases of a successful internet-based data analytics? The phases which are integral to a data analytics focused internet, they are into the existing framework of, they have to be integrated into the existing framework of internet work program. So as the internet, there's a life cycle for internet, the data analytics has to be integrated, has to become part of the formal workflow of the internet department. So what are the main phases? The main phases are scoping, that is number one. Number two is data request. You integrate that, understand that, carry out analytics, and then of course you report it. So be saying what is scoping. So what are the objectives for scoping? Perform existing scoping activities to prepare for the review. Understand areas where data analytics would be most useful. Identify relevant systems and data sets. Now the key questions one needs to ask while doing scoping is, what data exists? Can the subject of an audit be really observed in existing data sets? Does the auditee agree that data analytics can lead to an accurate answer? Are multiple data sets required? Can these be tied together? What thresholds, characteristics, etc. constitute an exception? What business processes support the generation of the data? So I think these are important activities. As I told you, if you are looking at procurement, and as I initially mentioned, we are looking at it for an organization. We talked about 140 objectives, but after doing a scoping, after looking at the data, what data exists, what are the tolerance, what are the thresholds, characteristics that will constitute an exception, what business processes support the generation of data. When we looked at all this, we said 115 of those objectives are relevant for the organization. So I think we did a scoping and said this is needed for this data analytics exercise. Then of course we come to data request. Obtain data necessary to complete the audit, minimize need to re-request data. So if the listing is complete, if the understanding is complete, the scoping has been carried out properly, the understanding of the data is right, then it will minimize the need to re-request data. So who can provide the data? Whether IT will provide the data, the business owners will provide the data. In case of master data, it is provided by the IT mainly. In case of transactional data, the business owners can provide it. The business unit may not be able to change filters, output fields, or the file format. So you need you need to add on 2 columns, you need to add on, change the file format, etc. The business unit will have to request maybe IT and get this done. So IT may take longer, may not understand business meaning of data fields, will give you exactly what you ask for. So it's important what to get, how to get it. Do we understand what data is available? More versus less, fields, filters. How do we want the data? How can we receive the data? size, and security. Now, again, as I was saying, we were carrying out a particular internal audit in a factory in a manufacturing location, and all the data was complete except the weighbridge data became really relevant, where you needed to have that weighbridge data come in, and then we link that up to all the other receipts that we had, all the other, for a particular sale, all the outwards that went out, for a logistic audit, for all the inwards and outwards that went out, and you needed to have that, and that weighbridge data was not linked with the ERP of the organization. So basically we had to request it separately. So we had to actually call for a vendor of the weighbridge and get the data for 2 years from the web system where it was stored on the server. So, get it in the format in which you could use it and then use it. So I think it becomes very important, and we had to do it in the middle of the exercise. So if this was scoped earlier properly, then we could have requested it earlier and carried out properly, rather than in the middle of the exercise realizing that this is missing, this is the missing piece without which you cannot quantify, you cannot arrive at conclusions, or you cannot actually carry out data analytics or analysis of the data. So I think scoping and data request are very important phases of a data analytics exercise. Then comes integration, prepare data received for analysis, validate completeness of data received and imported. Now, again, to re-emphasize, scoping and data request becomes important because you are dependent on third-party business owners, IT, etc., vendors, etc., to get that. Data integration is your internal exercise, which is internal to your data analytics exercise. So I think, again, scoping and data request is based on third party study outside your internal study and outside your department. So I think that again becomes more critical. Then of course your data integration, prepare data received for analysis, validate completeness of data received and imported, select the technology best suited for analytics, volume, complexity, accessibility, in-house expertise and skills, importing data into analysis tools. Data types are important. You can take PDF files into data, or you would like to directly access through a ODBC. So all that is done during the scoping and the data request exercise, but then integrating it with and getting the data, validating completeness using record counts, system report, general ledger, etc. Determine how disparate data will be integrated. You have multiple files, maybe disparate data from different sources, which you need to integrate to carry out your internal exercise and then form your conclusions and get evidence. So prepare any transformational or mappings which you require. So data integration is the third stage in the data analytics exercise. Then we get into analytics. Perform the desired analytics, logical, creative, evolving. Build test scripts, validate the accuracy of the scripts and other applicable KPIs or metrics which you have got. Confirm test scripts are identifying the intended results. There is a lot of possibility when you carrying out data analytics that you get a lot of false positives. So you need to be very clear how you build your test scripts so that the false positives are brought to the minimum. I would not say that they're eliminated totally, because except for very simple tests, if you're carrying out complex tests or you're trying to take data from multiple sources, you're trying to have complex systems from where you're deriving your data, false positive will happen. And I think once you have this, once you have performed this analysis, you'll be talking continuously to the process owners, be in dialogue with them, and then you'll realize that these are the false positive. You need to redo or rebuild your test scripts to ensure that they give the desired results, which can then be taken to the auditee finally for discussions and interacting with them. So I think this becomes very important. Unless there is an integrity issues where we're talking about fraud, analytics, etc. I think a two-way interaction with business owners, with business process owners, is very important in the entire data analytics exercise. So you have this reports, audit results, deliver quality and actionable audit results. Key tasks are validate approach with auditee, validate any exceptions with auditee, update data analysis and incorporate lessons learned as appropriate, investigate variances, offending transactions, categorize variances if possible, finalize audit report, 100% of the population is tested, undisputed results, targeted follow. I think there is a overlap between data analysis and delivering quality and actionable audit results. Why? Because to do that, you'll have to validate your approach with the auditee again and again continuously, any exceptions with the auditee, because you don't want to end up with the data at the end or an actionable result which you present where the auditee says this is all wrong. You yourself find out that this is all wrong. The premise was wrong or the way you built your audit script was wrong. So it's a two-way exercise, very important, which will continue throughout the exercise after data integration to data analysis and presenting the results. Validate approach with auditee, validate any exceptions, investigate variances, offending transactions, categorize the variances if possible, finalize audit report, and 100% of the population is tested so that it is undisputed and there is a targeted follow-up date to make the things happen, to set right the systems which you have shown to be deviating from the process. Now, what are the types of data analytics? I will skip through this, just go very quickly over this. I think we know there are business performance which identifies key ratios and metrics. So there'll be financial and operational metrics, there'll be scorecards, KPIs. There's clustering of data where you can group them together, different variables into similar data types for easy visualization and identification of the problem areas. Stratifications, geographical, product, business unit or segmentation criteria can be used to cluster data together. The trends could be shown in visual form. As I said, visualization can be used a lot. You can have the time series or regression which is there. You have event driven results, abnormalities. Then you can have descriptive statistical analysis in terms of distributions, outliers which are there in like you see in quality control, correlations and regression, volatility. So I think there are different ways, different types of data analytics which are available, and most of the tools today allow you to do this at a click of a button with some intelligence being built in. So it's possible to do all these things, and of course data visualization has become big after field work. The number two stage where it is being used maximum is visualization. Now let's look at some case studies on data analytics. Before I get into some procure to pay cycle and payroll cycle, let's look at a case study on data analytics. So a pharmaceutical revenue management data was available. So a global pharmaceutical major specializing in active pharmaceutical ingredients API for drug manufacturing and biotechnology required to have close oversight and regular reporting over key revenue management and stock return metrics in the order to cash cycle across their 1000 plus dealer and stockist network in Indian market. So what was happening was that you had returns which are happening, so you keep invoicing them. There are different price lists which are there, and then the stockist tickets keeps them with them. They do secondary sales, and then the stockist says, this has not been sold, this is near expiry, or this is not required, and the dealer and the stockist send it back to you, back to the company. So the company sought to look at the internal auditor sought to look at the complete compliance with corporate revenue management stock return standard operating procedure. They sought to analyze 100% of the sale and sale return transactions with each dealer and stockist during the audit period. So they took a 2-year period and said, let's look at what is happening in whether in monitoring the timely issue of near expiry finished goods pharma product batches to avoid holding of such batches beyond its expiry date. And stock returns were checked and analyzed to ensure that the returns are being valued and accounted at par with the original sale invoice unit price. Now, I think what was important is for the sales, your prices kept changing. Maybe you had a X price, and then after 6 months you had a Y price, and then after 6 months you had a Z price. I'm just putting it very simplistically. It changed from product to product, and then you had the stockist returned it after a year, after 6 months, after 8 months, after 3 months. So you have more than 500 billion records for the 1-year audit. So incorrect. What was the result is, after looking at the center exercise, looking at the masters, looking at the supply issues, and then looking at the stock returns, the incorrect credit note valuation issued for stock returns to the tune of 37.5 million rupees. Expired pharma batches identified running into rupees 15 million. Results of this analysis were validated and reviewed with the operating management. Root cause was identified as sales and channel team members manually overriding corporate suggested policies within the ERP systems to drive sales. They wanted to drive more sales and benefit interested dealers and stockists. To interested dealers and stockists, they were ensuring that they were returning back the material, and they were actually intentionally ensuring that they were returning back the material, and that was adjusted against the later price list, which was higher compared to when it was issued earlier. Now, if I look at this case study, I can draw a similarity between two other cases that we have seen happening in the country. One is for automobile industry, where again credit notes are issued for across the country, and again FMCG, where again credit notes issued to dealers and stockists for returns can be analyzed using analytics. The second case study is for an IT company, IT services company, where they looked at the contracted data. So they had hundreds of projects across America and Asia, North America prominently, and with a large contractor workforce supplied by third-party staffing firms. Usually IT firms take in large workforce from third-party staffing firms, and the client desired to audit contractor workforce performance bonus payouts, whether they are in line with the agreement and the SLA, whatever the SLA was put in for different contractors, whether they fulfilled that or not. Now, all this was analyzed again, and what was coming out was ineligible and inadmissible payouts were detected where SLA targets were not being achieved for the same contractors. And upon review of the findings with the contract management team within the client, action was taken to delist non-performing contractors and remove the employees having a nexus with such contractors. So this was another second area which was applied. Now, in manufacturing cases also, we have seen data analytics being applied where you have got large workforce which are performing or which are carrying out work in the company in manufacturing area. They have been taken on the roles from contractors, different contractors, and not bonus, but their performance is productivity linked. That is number one. Number two is they are paid on a per piece basis, on production volume basis. And what we have seen is you could actually carry out analytics, linking up the production files and looking at the production issue, what has happened and what the contractor has claimed and what has been passed, what has been actually billed by the contractor and what has been paid out by accounts department. So you can do a three-way mapping, and again some interesting results could come out. So this is an IT company. We're talking about manufacturing companies where we have carried out analytics, and I'm just talking about different companies, different areas, but again analytics can provide some interesting results for improvement for the organization. Now I talked about it's procure to pay. Procure to pay is a very important exercise and also a favorite of the internal auditors, because there's so much to audit. If it's a manufacturing company, maybe 40%, 50%, 60% of the turnover would be in procurement. If you look at the percentage, and if you look at even for service organizations, services procured is a big area. So this is one of the major areas of success with data analytics. Now, the main objective is to check for the validity of items. This encompasses supplier overpricing, invalid invoices, fraud of various types, accidental duplication, and simply picking up out of control expenses. So what I'm saying is, here I've just listed out few illustrative analytic tests for visualization or exception identification. So let's just go through them quickly. Analyze purchase or payments by value bands and identify unusual trends. Now you could do that segmental. You could, if it's a manufacturing enterprise, you could say raw material separately, packing material separately, chemicals separately if there are chemicals, consumables separately. Again, if you study and if you find that there are certain items which are bought at a higher value, then you can take that as a separate item segment, and then you can analyze the purchase or payments by value bands and identify unusual trends in them. Then there could be test for splitting, particularly below threshold or authority limits. You could summarize by type of payment. It's a regular supplier, one-time supplier. Again, in one or two organizations, number of organizations, we have seen that you could also summarize by type of payment by whether you are supplying, whether you are paying out to a OEM, a manufacturer, whether you're paying out for imports, whether the item is an imported item. So you could actually classify, if the company is classified and put a flag for different types of supplies coming in from different types of category of vendors, then you could actually summarize the payment by them and see what's happening. And then you could summarize them by regular supplier or one-time supplier, and then again look at the type of payments which are being made. Analyze by period to determine seasonal fluctuations. Analyze late shipments for impact on jobs, projects, or sales orders due. Reconcile orders received to purchase order to identify shipments not ordered. One could say that the ERP takes care of it, but you'll be surprised what results come out if you run analytics on a lot of audit tests. Report on purchasing performance by location. Summarize item delivery and quality and compare vendor performance. Compare accrued payables to received items to reconcile to general ledger. Check for continued purchases despite high rate of return, rejections or credits. Track scheduled receipt dates versus actual receipt dates. Identify price increase greater than acceptable percentages. Let's take just one of them. Identify price increases greater than acceptable percentages. We just ran this particular test on a procurement department for procurement for a particular organization, and we said let's look at quarter on quarter price increases by the same vendor if it's only one vendor supplying the item, or we said quarter on quarter more than 10% increase in price by different vendors for the same item. So we took those two scenarios, we ran analytics over it, and we presented it over 3 years, saying that we are finding more than 10% price increase in the same quarter from the same vendor. When we analyzed data over 3 years, we also found more than 10% price increase from different vendors for the same item. The price going up over 3 years, but in the same quarter it is going up. Now, I think what is important is that when the audit team looked at it, when we brainstormed, what we found was that over a period of 3 years, in one quarter, if a 10% is going up, fine, no issues. What we needed to understand also was every quarter how much it was going up. So maybe if in 3 years there were 12 quarters, then over 12 quarters, how much did the price go up? If it was going up by more than 10% in one quarter, did it continue to show that every 2 or 3 quarters the price went up by more than 10%? Or maybe in a 3-year period it just went up twice or just once? So when we said was the pricing is going up for certain commodities, certain which we know from the market, which we know from benchmarking. So then let the procurement or the purchase department would not be in a position to do anything about it. But if it is going up quarter on quarter, it is going up and it is more than what the market is, what is happening for that particular item in the market, then you need to focus on that and sit down and analyze it further. So I'm just giving an example how you can run analytics on few million transactions and zero in on something which can then be audited further and broken down and looked at for adding value to the organization. Find invoices for more than one purchase order authorization. Isolate and extract pricing and receipt quantity variations by vendor and purchase order. I think very important. Filter out multiple invoices just under approval cutoff levels. Detect invoice payments on weekends or public holidays. High value items being bought from a single vendor. Can we do more vendor development by the organization? Aging analysis of open orders beyond a specified number of months. Changes to orders in terms of quantity and unit price after receipt of material. Orders raised after receipt of material and or after receipt of suppliers' bills. Sequential orders raised on suspect vendors, backdating of orders. So I think these are few examples which you have said. Same material being bought under different material codes at different units also. Same material being bought from the same vendor at different payment terms and or delivery terms. Geographically different unit, you're maybe in the same state, but you're buying it from the same vendor at different prices. Payment to vendors initiated and approved by the same user. Same vendor having multiple vendor codes, of which one or more codes having debit balance, while the other code is receiving bill-based payments without adjusting the on-account advances. So duplicate bill payments to a vendor against the same invoice and order. Exact match on invoice. And you can also do a fuzzy match. You can do a fuzzy pattern-based match on the same objective to say if the name is around so much, maybe they have created two different names. So you can do a fuzzy pattern match to some extent by different tools, and you can look at it. Material bought at a higher price from a vendor when there is an open order within the system for the same material pending delivery at a lower price. This is a most commonly found issue in a lot of procurement departments. And maybe you can also run further that you closed the lower price purchase order and then bought it at a same item from the same vendor at a higher price, or maybe closed one from a particular vendor and then bought it at a higher price from another vendor supplying the same item. So I think all that can be done using analytics very easily. Let's look at a case study on payroll fraud analytics. Illustrative. These are just some illustrations. There are you can just go on and on. It is all the imagination is the key here. How innovative is the internal auditor, and how you understand the system, and how you can design your audit tests to look at the process per se. So the illustrative listing of fraud analytics in payroll is, map the payroll transaction file to payroll master file to find if there are any ghost employees being paid. Sort employees by name, address, location, and other master fields to identify conflict of interest scenarios where managers have relatives working for them. Check for duplicate employees in the master list of employees by name, date of birth, address, bank account number, PAN number, or a combination of fields or independent field level duplicate checks. Fuzzy duplicate match can be done on the master list of employees by name and address to identify potential pattern matches on employee name and address. Compute plant-wise, machine-wise, location-wise correlation score between wage and overtime payments to identify centers with negative correlation scores like falling wage outgoes and rising overtime payouts. Now, I think this is a very important match, because if you're looking at geographically different units and with different machine centers, cost centers, plants, you can actually run on the wage for a particular period, 1 year, 2 years, 3 years. You can look at the wage payments and then look at the overtime payouts. I think what is important here is to understand the business. So you should know that, once a year, maybe 15 days or 30 days, there'll be a shutdown. And in that shutdown, maybe the wages goes down, but the overtime will increase because the maintenance staff are working overtime. So, it all depends on you have to understanding the business and then running analytics. Extract all payroll payments where the gross amount exceeds the set grade threshold limits as per the masters. Compare time card attendance entries to payroll and check for variances like unaccounted leave without pay. Dedupe tests checks to identify employees getting the same net pay at multiple locations of the company in the same month. I could go through this entire thing, but I'll, I think, leave this out. Maybe we can send this out to participants who are there today on the email. I'll not go through more tests. I'll move on ahead. But again, I think some more tests are employees who have rejoined back after departure and continue to get retirement benefits with standard payroll payments, inconsistent payroll master deductions within the same groups like grade, designation, location. So a whole lot of payroll fraud analytics which can be run on the payroll cycle, payroll data to look at what's happening in their organization and to satisfy oneself that nothing wrong is happening in a particular process, in the payroll process. Compare vendor addresses, phone numbers, and employee addresses, phone numbers to identify conflict of interest situations. Outliers in payroll payments where the ratio of the highest to the next highest net payroll payment to employees is irregular and excessive. important to understand why that is happening, whether increments were given. If they're not given, then why it is so that you suddenly have this particular thing. Now, we have looked at data analytics, we have looked at objectives, priorities, challenges, identifying stakeholders, what are the concerns, methodology, some case studies. We have looked at some objectives for procure to pay and payroll fraud analytics objectives. Let's switch to continuous control monitoring, a very interesting area, which I think with advent of technology, a low cost technology, most organizations are switching to continuous control monitoring, continuous control auditing, continuous assurance. Why? Because management is interested in having near real-time data to take corrective action, to set right the deviations, and to identify patterns where they can act on a particular business area on a process to ensure that nothing goes wrong and business objectives are achieved. So I think it is important that slowly from ad hoc analytics, from theme-based audits. Of course, auditors will continue to use analytics for theme-based audits, for stressed areas, pain areas, but there is a gradual transition to some of the objectives to be covered under continuous control monitoring by the management themselves. So there are 2 or 3 different scenarios that we have seen in the country. One is auditors carry out continuous auditing on the some of the key objectives which are identified, which are necessary, so that you continue to highlight them month on month, fortnight on fortnight, or maybe every quarter, and bring them down by discussing with the process owners and bring change or bring a culture change in the organization to ensure that repetitive variations, deviations are not there continuously and the organization does not suffer. That's number one. Number two is once you set a continuous auditing in a particular area, then maybe you can leave that to the business owners or business process owners by educating them, being a partner with them so that they continue doing their continuous control monitoring and auditors move on to other areas for improvement for the organization. So I think we have seen that happen in a number of organizations across the country. So now, how do you transition from data analytics to continuous control monitoring? We discussed earlier that data analytics has to be integrated with the audit process life cycle, the process of internal auditing per se by internal auditors. Similarly, continuous monitoring is an outgrowth of the data analytics phases discussed earlier. Data analytics are formalized and scheduled to allow for repeatable auditing and monitoring. So you formalize the data analytics and allow for repeatable auditing and monitoring. And key characteristics of this, again, scoping, data request, data integration, data analysis, findings, validation, reporting, actionable reports, results to be communicated. So I think, again, the flow is the same, but you're just formalizing it to ensure that it is a repeatable auditing and monitoring. So what is scoping? You inventorize the potential analytics areas at a macro level. If you want to look at compliance areas, maybe you identify 15, 20, a CFO of the organization says that I have to issue a certificate to the board that all compliances are in place, and these are the 20 key compliances which I need to look at, and I want to be sure that they are happening every day or they are happening as and when they happen, the incident, the process takes place. So you look at compliances, or maybe procurement. You need to look at the non-compliances in the procurement. We looked at the procure to pay cycle, and maybe some of the audit tests or more can be designed to ensure that you come to know as soon as the transaction has happened, so that you can act on them, prevent them, or maybe act immediately to ensure that they do not recur in future, or the risk can be minimized. So I think what is important is the scoping is inventorize potential analytics area at a macro level, select analytics area and identify detailed metrics, define requirements for the individual tests or metrics, of course request the data. So again, you'll have to ensure protocol so that maybe requested data could be that for an organization, we know that number of organizations where we have set up continuous control monitoring as internal auditors or as looking at the projects for them. They have said that they work during the day, so maybe you could request for data from the ERP, the homegrown ERP, or from their SAP systems, or from their other systems that the organization uses at night. So you could schedule You could formalize the data request by scheduling periodic supply of data, and the data could be supplied in the night when there is less load on the servers. So you could then get your data in the night. The analytics could be carried out in the night, and the results could be communicated early morning. When the people come to work, they have the results available. So if there are deviations, they could look at it. So the data request becomes important. How do you formalize the data request? How do you schedule periodic supply of data and design transfer protocols for data extracts? Very important. Of course, you'll have to work with IT here or work with the process owners. Of course, IT would come in the picture 100%. Look at the data integration, automate periodic refresh or load of data request, automate data validation procedures. Then you will analyze and of course communicate the findings to the end users in near real time. So as I said, one of the case studies is that a CFO continuous control monitoring. I'm not talking about continuous auditing, talking about continuous control monitoring, where a CFO said that these are the 20 controls, the 20 tests for compliances which need to be monitored on a regular basis. You have got decentralized across the country. You've got 25 different regional offices where there are regional managers, head of accounts sitting there in 25 regions. So at night, you query the data, get the data, run those tests separately from the ERP. If you find deviation, email goes out to automated email goes out to the particular regional head and with a copy to the CFO secretary. So the action taken, the person comes in the morning, takes action at 9 o'clock, 9:30, and immediately it's again communicated to the secretary. So what is happening is the transactions for the earlier day, you have already checked them to ensure that there's no non-compliance with the law, with all this data, with all the tests that you have set up, maybe for the month, for the day, for the quarter, whatever. So I'm just giving an example. So I think this is how results are used in real time, and you do monitor over a period of time how many deviations were there, whether they're coming down, going up or down. Now, what is continuous control monitoring? The Gartner study says that continuous control monitoring is a set of technologies to reduce business losses through continuous monitoring and reducing the cost of audits through continuous auditing of the controls in financial and other transactional applications. Now, this is the Gartner definition. Here, they are even talking about reducing the cost of audit. So they are right, because we have seen in number of cases in the country where there are IFC tests, they have been automated by selecting automatically the 25 transactions at random, running the tests, running the algorithm, ensuring that the results are tabulated in the form in which it is required, so that other than the physicals, the rest 90% of the data which is there in soft form, all the IFC tests are done. So it reduces the cost of audit by people have to go through, sit down and talk to people, get data, run those tests. So it reduces a lot of data. So it helps by using technology to reduce business losses through continuous monitoring and reduces the cost of audits. Now, there is a GTEC 3 guide by Institute of Internal Auditors, US, on continuous auditing, which talks about continuous monitoring is a process that management puts in place to ensure that its policies, procedures, and business processes are operating effectively. Management identifies critical control points and implements automated tests to determine if these controls are working properly. Now, the continuous monitoring process typically involves the automated testing of all transactions and system activities within a given business process area against a suite of controls rules. I think this is what the GTEC guide talks about. This is exactly what auditors do, but only thing is this is being done at regular intervals. So I think this is continuous auditing. So if a business entity or business processes are doing it, it is continuous control monitoring. If the auditors are doing it, it's continuous auditing. Now, how is the organization defining the CACM thing? Continuous monitoring, it's an automated feedback mechanism used by management to help ensure that systems and controls operate as designed and transactions are processed as prescribed. Uh, Continuous auditing is collection of evidence by an internal or external auditor or IT systems process on IT systems processes, transactions and controls on a frequent or continuous basis. And continuous assurance is providing a continuous or on-demand assurance opinion on systems or transactions. So I think if the business owners are carrying it out, it's continuous monitoring. Auditors are carrying it out, continuous auditing. So I think how do you look at continuous auditing vis-a-vis continuous monitoring? So auditing perform by internal audit, gain audit evidence more effectively, react more timely on a timely basis, leverage technology to make the internal audits more efficient, focus audits more specifically, help monitor compliances with policies, procedure, regulations, and become more valuable to business. And of course, continuous monitoring is improved governance, increase visibility into operations, obtain better information for day-to-day decision making, strive to reduce cost of controls, leverage technology to create efficiencies. Now, what we have seen is, as I discussed earlier, as I talked about it earlier, continuous auditing can be graduated to handed over to business process owners for making it a continuous control monitoring exercise, and auditors can move on to newer areas. What drivers influence CM in your organization? I'll not get into all the areas, but there are strategic drivers, external drivers, operational drivers. Let's take one. External drivers would be scrutiny from rating agencies, listing standards, or expanding regulatory and legal risk environment. We discussed about this, that regulations are getting more stricter, more regulations are coming into play. So these are the external drivers which you need to monitor, and you can use continuous monitoring to do that. Uncertain economic environment, increasing business risk. So you have a lot of uncertain environment and you would like to monitor that. So you can use, that's an external driver. An operational driver could be a SOX or a ERP conversion. So you need to look at the masters, or maybe occurrence of a risk or fraud which has happened. So you would like to focus more on that issue. So I'm not getting into the entire thing. These are the drivers which influence CM in the organization. We have discussed this again. There's a framework. You have general ledger, accounts payable, accounts receivable, HR, others. You replicate, or you have an ETL. For example, for SAP, you have a smart exporter, which is a ETL, or for some other ERP, you will have some other ETL, or you may utilize, maybe for the same ERP, you can utilize multiple ETLs which are available in the market. So you have an ETL which will allow you to extract, transform, load. You can take on data. You use statistical and analytical routines, continuously perform data, replicated data for analysis, identify the exceptions, visualize, use visualization, dashboards, put it up in the form of reports, and exception management interfaces there to ensure that these exceptions are taken care of, they are acted upon. So this is the continuous monitoring framework for an entity. This would remain the same for a continuous auditing framework also. You have various source systems, and we have just looked at general ledger, AP, AR, HR. I talked about a Weybridge which is different from this system. So you will have multiple, any digital data in any digital form, any source system, get the data, analyze them, identify exceptions, and take it forward. What are the steps and stages in a typical control monitoring implementation? So you have step 1 is design controls, step 2 is implement an ETL, step 3 is develop analytics, and step 4 is user components, which is dashboards, user training, acceptance training, tuning, and optimization. So I think this is how it moves, and you implement a continuous monitoring implementation. Now the steps are the same as for an audit life cycle. So that is why this slide I have put it up. Plan, assess, design, implement, execute, evaluate. Let's just look at one or two of them. You have a planning, determine client objectives with key stakeholders, prepare engagement approach with team, kick off the project. So you have needs and requirements summary which you prepare, and you have an engagement letter. So if you're an outsourced firm, you have an engagement letter. You need to assess it, design, implement, execute, evaluate. So these are the steps and stages in a typical continuous monitoring implementation, which is functional. We talked about technical earlier. If you look at this one, this was more technical, and this is in terms of a functional perspective of how a continuous monitoring exercise will progress. What are the benefits? Again, I'm not getting into the nitty-gritty of this slide, but what are the benefits is greater efficiency, enhanced controls, near real time. So earlier information, periodic information, even a periodic monthly, you can set up continuous monitoring on a monthly basis also. And we have seen that happening in organizations. So it's an earlier information. It is not that you realize it too late for somebody to act. So there are no surprises. So that is why earlier information, reduce complexity, because you have a greater visibility on how processes are functioning. So regulatory compliance can be monitored. So you have reduced complexity, and it leads to good governance, visibility on good governance, demonstrating good governance. So greater efficiency, enhanced controls, earlier information, reduced complexity. And I think these are the benefits, major benefits, a broad range of potential benefits for an organization which adopts continuous monitoring, and also for an internal audit department which will adopt continuous auditing to help the business. What are the critical success factors of a typical continuous monitoring implementation? So what are the action points? Again, I think it's important, the senior executive support. So very important action point to address these vital issues, from identification, including opportunity identification, selection, prioritization, and sign off. If we have a buy-in from the senior executives, it becomes easier. Technology tools and experience resources, important. Established approach to continuous monitoring. So taking a global approach which are used by all organizations. Well planned approach, organizational alignment. So align it with the objectives for the organization, partnering with team members to help enable knowledge transfer, senior industry and functional practitioners. So I think important that critical success factors of a typical continuous monitoring implementation. I would request the organizers to send across this presentation to all those who have participated today, so that if I'm skipping some of the areas, you could go through the slides. Now, I've just two case studies on this. One is continuous monitoring. A large retailer is having a point of sales POS transactions, trying to identify fraud and abuse by associates at the register. Whenever the point of sales happens in retail industry, because you have got multiple, you've got maybe 500 showrooms across the country or across the region, and you need to do this. Now, these are some cases which we have seen actually. So in this case, there were 600. We have just put some. We've just fictionalized some of the case studies. So we have put 600 stores, and you have ETL process to get data. You created a data warehouse supporting data models, and then you ran 20 algorithms, 20 different tests on a, which will give you a flag onto sales which is happening at stores, so that you could say there is potential fraud or there is likelihood of abuse, so that you can investigate further. So you ran that, and then of course you get outliers. Based on these outliers, based on the data which is coming, you can make a dashboard for a region, for a store, for a particular cash machine, where it is happening and so on. So point of sale machine which is happening, so computer which is happening. So you can actually drill down and say these are the outliers and we want to focus on that. So, and based on that, you can take your study further. So these are, because this is open to abuse, open to misuse, and you can identify early abuse so that it can be rectified. On a power transmission projects company, you have a worker wages bill. So globally, which is happening. So you need to capture irregular and inadmissible wage bill payments by its manpower agents at the project sites. So you run a weekly background Oracle report to obtain data from the wage system for approximately 175 sites, create a data repository to maintain and store the input wage bill data project wise along with the master site wise, configured the 10 to 12 metrics that monitored suspect wage payments on a weekly basis, and transactions were then flagged off. And of course, you made a dashboard that identified wage payment to ghost workers or duplicate payments or inadmissible allowances as per overtime, grade, rate. I think we have looked at number of parameters in data analytics for in the payroll cycle, where we talked about what can go wrong. And I think you can build in the necessary, depending on the company, depending on the requirement, you could build in the tests which can then be looked at in form of a dashboard and then taken forward, drill down to actually look at the transaction and then take it forward for improvements. Logistic company, this is a compliance framework. So a compliance test, I'm going to skip through this. We discussed about compliance, monitoring compliances through continuous monitoring. This was set up by a CFO who said, I would like to look at the, compliances, 20 top compliances for my company, which can be done overnight, and then you could look at the data. For a high-end hotel and luxury resort, look at the revenue system, guest billing from the ERP. They have their own ERP systems, and you have to extract that information to see and run tests to see that nothing is going wrong, nothing is siphoned off, there are no frauds happening. the rooms are properly monitored, the revenue is recognized as per the laid down policies, procedures, lists which are there in the system, all approvals are in place accordingly. So you ran a continuous monitoring exercise to look at those, different hotel properties, different segments in the hotel properties to ensure that it's run properly. So you do a continuous monitoring because otherwise it's very difficult to do an audit or to do independently look at, data. If you just want to look at it manually, nearly impossible. Now, how do you sustain data analytics and continuous control monitoring? So how to accelerate the adoption of analytics through your enterprise and capture the value of the organizational data? I think what is important is start with low hanging fruit and develop an analytics roadmap. Know which questions matter most to your organization process to be monitored. Very important for an organization. When we went in for an organization, I think sales was very critical for them. In some organizations, if you look at a hotel industry, the revenue is very important to them. If you look at and the rates which they get in a hotel, they already run a software to optimize their rates. What to give to a external aggregator and what should be the rack rate and what should be the FTI rate, FIT rate if a person walks in. So everything is fixed, but still, how does it work? What is happening? So I think that becomes revenue becomes very important for them. As we discussed for a retail organization, the point of sale, there's no abuse. Everything is happening fine is very important to them. So know which questions matter most to your organization process to be monitored. Automate delivery of information to stakeholders. Engage and visualize output must deliver insights to make fact-based decisions. Embed analytic capabilities into decision-making processes and match analytics to the job at hand. How you get started is integrate your audit process lifecycle, collaborate with clients on a single platform. I think this is the most important thing is collaboration with clients, with business process owners. Make every audit a data-driven audit. Use analytics through all phases of projects. Use a RPA where manual work is an obstacle. Use audit apps where process is well defined. Augment audits with statistical models and machine learning. Evolve to continuous monitoring and deep learning. So I think this is how you can get started. But I think what is more important is to interact with your clients, understand what they require. And of course, for an auditor, I think it's important to crunch or bring efficiency in the job by looking at a whole data set, looking at the entire universe of a particular objective, reducing the cycle time. Also, this is important for an outsourced function where you can actually crunch your time at the same time look at the entire data set. So it becomes value add to the organization where you can actually talk saying that, looked at all the masters and these are the duplicates, or you looked at 3 years data and this is quarter on quarter increases by a vendor. So you're talking sense because you're talking with a lot of data analytics which has been done. The false positives have been eliminated, and then you are talking to a client on how value can be added to a particular process. So I think this was in short what I had to speak about. I think I was told by Amit that I think 1 hour 15 minutes would be good to go. So it's almost 1 hour 30 minutes. So if there are any questions, I would be happy to take those questions. Thank you again to all the wonderful participants. Yeah. Amit or
Hi everyone. Yeah, Mr. Deepjee. So just a shout out to all the participants. If you have any questions, please you can use the chat window to write your questions and we can then take it up. So Mr. Deepjee, let's just give everyone say just a minute. As of now, there are no questions in the
so I
chat
think
window. Let's just give a minute here
yeah,
to people to type.
sure. I think I'm sorry, Amit. I said 1 hour 15 minutes. I took 1 hour 30 minutes, and I think in the last I realized that I was out of time, so I had to just rush through the last part of my presentation.
No, that's fine. Actually, this was very, very insightful, Mr. Deepjee. I should say that. And I'm sure all of our participants also feel the same.
Thanks a lot. Thanks a lot.
Okay, we have one question from Deepak. He's actually asking, do we have any reference case studies in detail on how red flags have been Sorry, I
See,
can't see. On how red flags have been put in place for a continuous audit.
there are a number of case studies available, but we usually do not want to link a client to a case, so that is why uh, we have number of case studies. If you look at the data analytics where we talked about, the price increases, where we talked about number of objectives for procure to pay cycle. So we have put that in place for number of clients where either the auditors have put it in place or the CFO has said or the purchase department themselves have said that we want to put it in place. And what they have done is, let me share with you, for example, they have said that any 5% deviation or a 5% increase in the price of any item any month has to be highlighted and we can look at it. Uh, Similarly, they have said, all the objectives which I ran for data analytics, they have put those down and said, 20, 25 objectives that, these are the likelihood of fraud or likelihood of abuse and can be looked at for the procurement function per se. So we have seen that happening in procurement area. We have seen that happening on the compliance side where people have put in objectives and running continuous monitoring in the country. So I think that's as far as we can get, and if more information is required, if you talk to me, we could share some information without divulging the confidentiality of the client or anything. We could just discuss that.
Great, thanks, sir. And there's a follow-up question from Deepak again.
Right.
If you could share a few applications which we can use for continuous audits.
I think what I would say is that one is, if you look at, if you can get help from IT, then you can configure most of the tests in SAP or Oracle, the ERP which you are using. Uh, for homegrown ERP systems, it becomes a bit difficult because the vendors usually do not do a lot of customization in building audit tests. We, of course, are an interested party, so we usually recommend you use LSA, which is a continuous control monitoring tool from London, which is being used for even anti-money laundering exercises and by financial institutions, but the same can be used for continuous monitoring and continuous auditing. So we have put in place LSA along with IDEA software, along with Smart Exporter ETL in organizations where 2 or 3 organizations where they're using SAP. At the same time, I would say you can use multiple data analytics tools which are available in the market, integrate them with any ETL which is there, and you could use them for doing a continuous monitoring or a continuous control monitoring access, continuous auditing exercise. In few organizations, the SAP data itself was used. The SAP vendor itself helped us, the implementation partner helped us put in some monitoring controls where I actually sit on the advisory board of 2 or 3 companies. So there we had an in-house internal audit team run control testing on procurement areas. Procurement is a favorite area, as I said, where the SAP data itself was configured by the team, with the help of the implementation partner to ensure that we get continuous monitoring, results out of that. But then the problem is that every time you need to configure the ERP system, either SAP or Oracle, you'll have to keep going back to the vendor or the implementation partner or the partner who's maintaining it for you. Whereas if you have ad hoc analytic tools outside of SAP or Oracle or ERP, then it is possible for you to develop your own scripts within the internal department, without help from IT to modify them over a period of time.
Great, thanks, sir. I've got 2 questions. They're on similar lines, so I'll just repeat both of them. One is from Angad Singh and the other is from Vasudha Goyal. So the first question by Angad is, what's the best way for IA to convince business units to adopt data analytics modules? That's one. And then the other question from Vasudha is, auditees are adverse to sharing or disclosing data. How to overcome this?
Okay. See, the first is, we discussed already in the presentation that you'll have to have a buy-in to adopt analytics. The best buy-in is, if you're an in-house department, the best buy-in is that you can do more with less. I think that's very simple, because you can not only increase effectiveness, but you can increase the efficiency of your internal audits. So if you are talking about effectiveness, it is the delivery mechanism. You can look at data for over 3 years in procurement. Now, if you are not using analytics, it becomes very difficult to look at data over 1 month, 2 months, 6 months, or maybe, if you're looking at analytics, you can take a 5-year period, 3-year period, 2-year period, and look at the entire data set. So what you're telling the management is you're increasing the effectiveness by highlighting or by showcasing the value that internal can bring to the assignment, whichever theme-based audit or whichever areas are being audited. You are also bringing in a lot of efficiency because you can do more with less. So again, if you have team members and if you're scheduling audits, let us look at our firm. Basically, if you look at where we are carrying out for a 500 crore, 1000 crore, 1500 crore organization, you're going out to do a procurement audit earlier. Maybe you will send a 2-member team to spend 3 weeks to do an audit to an outside manufacturing location or a plant or a company, 2 or 3 factories. Now, with analytics, maybe you can do the same thing in 10 to 12 days because it is possible to be done, because you can actually take in data for 2 or 3 years. You can run all your tests and you can then go in the field with the deviations only. So basically you are bringing the life cycle, you're bringing the cycle time down for internal audit. So you're making it more efficient, you're making it more effective. Now, that is the best selling point for an organization. You have to sell to your CFO or to the CEO or to the organization that you need to invest in analytics. There's no other way. How I think 30, 40 or 40 years back, people said, 30 years back, people said you need to invest in computers. So the same way you need to invest in analytics, because without technology, it's not possible to carry out audits. I think that was the first part, Abhi. The second question was, if you could repeat the second question.
The second question was that, since auditees are very adverse to sharing data or disclosing data with audit, how do we overcome this?
Okay, now I think the second question is whether you carry out a manual audit or whether you carry out an analytics exercise, you need to have access to data. So I think that's a fundamental principle which is there in the charter, which is a buy-in with the top management, commitment from the top management, and a buy-in with the business process owner that you are going to look at data. So I think it's not a question which is specifically addressed in terms of data analytics, because even if you were to carry out a manual audit and you will say, let me look at your 1-year data, the business owner has to give you data. So I would say in a digital world or in a manual world, you need to have access to full data. I think that's one of the premises on which the charter is built for an internal auditor, and you go to the audit committee and you go to the top management and say that all processes, all data would be made available to the internal. That's one of the founding principles for a charter, you put down as an internal auditor. So business process owners would be hesitant to part with data, but I think if you work with them, it is possible to get data, and an internal auditor needs to have data.
Great, sir. I think there are no further questions. We've got a lot of appreciation from a lot of people, from Dhaval, from Deepak, Rakesh. All of them are saying the presentation has been very elaborate again, and they're actually they've had a really insightful session as well. In fact, Deepak also has said that he looks forward to reading the books that you've written.
Thanks a lot. I mean, thanks a lot to all of
Great.
you for being in the afternoon from 12 to 1:30. I think that's really appreciated. Thank you very much.
Great, sir. I think this is one last question, I think, which has popped up from Rakesh.
Yeah.
He asks, do you provide any training?
Yes, of course. I think that training we, of course, our company Audit provides a lot of training on. There are e-learning modules and there are online courses, there are physical training courses, and so on analytics.
Yeah, I can just perhaps shout out to Rakesh. We can share the coordinates of Mr. Deepjee, and perhaps if required, you can get in touch with him offline.
Yeah, sure. I think you have my. I think you have my business card. Yeah, I think this is my email ID. You can write here, but my email ID is deepjee.singhal@samoid.com. So it's DEEPJEE dot SINGHAL. My name deepjee.singhal@samoid.com. So you can reach out to me if you have queries. And I think Amit, I'll send across this presentation to you, and if someone in IA can send it out to all these 41 participants who are there, it'll be great.
Right, sir. And also, Mr. Deepjee, let me just take this opportunity to also thank you for this really insightful session. I think there were a lot of takeaways that I personally also took, and I'm sure a lot of our participants also have. So we look forward to having a lot more insightful sessions, with you as well in the future.
Thank
Thanks
you
for
very much.
everything.
Thanks a lot, Amit. Thanks a lot to Saket also, and thanks a lot to you for personally being with me throughout this presentation. Uh, and thanks a lot to Delhi chapter and all the wonderful participants once again. Thank you.
Great.
Been a
Thanks,
pleasure.
everyone. Now, yeah, same here. Now, just a request to all the participants, if you could just fill up a very short survey, a survey of around 30 seconds, on this session, please take time to do so. It'll help us, give you more and better webinars in the future. That's one. And second, we are also going to be placing a recording of this session on our YouTube channel. So please feel free to go and access this, the YouTube channel for IIA, as and when you get the time.
I think that's great. Thank you.
Great. Thank you, sir. Great. With this, I guess we can close this session formally. So thanks everyone, and look forward to seeing you in our next webinar conducted by the IA Delhi chapter. And thanks again, Mr. Deepjee, for gracing us with your presence.
Thank you very much.
Thank you
Thanks
very
a lot.
much.